Good morning, Saturday morning. Thank you very much for joining me for my credit boosting webinar. Give me just one moment and we will get started. Good morning, Facebook, YouTube friends. Thank you for joining me. Give me one moment and we'll get started. Okay, any questions during the webinar today? Please type them in the chat box. I am running solo this morning, so I'll try to catch and answer as many questions as you have as they pop up. I am on a tight time schedule today, so we are going to keep this to. I always like to keep my webinars under an hour, so we're going to try for 50 minutes on this one, but try to give you as much educational content as possible. So, who is today designed for? Today is designed for boosting your credit. I tend to connect people with different down payment assistance and home buying grants so people can purchase with just a few $1,000s out of pocket. The biggest hurdle that I typically run into is credit. So money is the easy part for us. With all of the programs out there, most of the people I work with have no problem coming up with a few $1,000s to purchase a home, but I always have those credit bumps and hiccups that tend to surface over the course of our lives. So been through it myself. So I've watched my credit just get crumbled after previous business failure, a couple of business failures, had to actually go through bankruptcy, foreclosure, all of those things, and rebuilt. And that was probably about 12, 15 years ago. So, and it was a lot harder back then. We have a lot of tools at your fingertips that can help you boost your credit scores very quickly. And there's actually a process that I've developed, especially in the mortgage world, because how the credit scores relate to the mortgage world is a little bit different than most people believe or understand. And we're going to go over those today. So today is designed for people who have their credit scores in that 500 to 600 space. Now, no question, if your credit scores are above 600, you can get a good lift out of this. If your scores are in the 700s, you may not get a whole lot of benefit out of today. So it's also for people that don't have any credit score. So if you have no credit profile, we're going to show you how to build credit very quickly and how to deal with recent traumatic events like bankruptcy, repossessions, how to handle collections. So some of the major things, and just anyone who wants to understand how credit relates to the mortgage world and how we can get a quick spike in your credit scores. So with that being said, we'll jump right into it. So why do I do these? Well, right now, the rental market is in such a bad state. It's crazy what you get for your money, very disheartening. And there's a lot of misinformation out there with regards to credit and how to handle it. And I find that there are no shortage of companies that are surfacing, especially as we're seeing credit scores deteriorating across the country. I'm actually located in southeastern Michigan, and we are actually watching credit scores fall off a cliff right now. And that's just due in large part to people being a little bit overextended. And unfortunately, the inflation that we've encountered over the past few years has done nothing but increase that. So I find that there are a lot of companies that are servicing that will claim to get your credit scores up quickly for certain fees. And there's a lot of credit repair companies and debt restructuring companies. A lot of those things are very opportunistic, to say the least. So there's no question that I find a lot of people are overpaying for credit repair that they can do themselves. And there are a lot of credit, I should say, counseling companies that, you know, basically fly and say that they're nonprofits. But I find that very few of them really are rooted in the belief systems that I align with. So as a result, credit counseling, I find more often than not, is nothing more than companies that are trying to separate you from your money. So I'm going to touch on all of those things today. Okay, my goals for you are to get your credit scores up 60 points in 60 days. I'm going to give you some of the best do's and don'ts tips with regards to how to get those scores up quickly. We're going to teach you how to identify areas on your credit that are ripe for a quick impact and to get those scores up. We're going to help you add new credit with the different tools that are out there that will impact your scores quickly. And we're going to set some reasonable goals and predictable timelines to get you where you need to be. So, but today is really designed to get your scores up 60 points in 60 days, especially with some of the programs that are starting to surface. I'm actually headed to a conference in a few moments in Detroit where there's a new program that's surfacing that's offering up to $75,000 to first-time home buyers. And these programs are going, in my opinion, going to be surfacing across the country. So the U.S. Secretary Bessent came out a few weeks ago and stated that there is a housing emergency in the U.S. And truth be told, I think it's global right now. We've watched rental rates increase to the point where they are outpacing inflation. And there is actually, thinking of declaring a national emergency for housing. Right now, the average first-time home buyer in the United States is 38 years old, the highest level ever on record. So we are actually seeing a couple of generations that are actually giving up on home ownership as a result. So my mission is to try and educate as many people as I possibly can to tap into the different tools out there so they can get ahead of things and build that wealth. So the earlier we can get those generations into purchasing, the better, the quicker they can, enjoy that wealth building process in real estate. And don't get me wrong, owning a home is not for everyone, but I'm telling you, it is a great way to build wealth for the long run. So with that being said, I'm going to jump right into today's educational content. So first thing, all right, there are 3 credit bureaus, as most people are aware of. There's TransUnion, Equifax, and Experian. Now, in the mortgage world, they are going to be looking at the middle credit score of those 3. And when they look at those 3, they are going to be looking at the FICO scores, the models 2, 3, 4, and 5. Now, when you go out in the credit world, there's all kinds of algorithms out there that generate credit scores. Credit Karma has their free model. Experian has their free model. If you go to in the automotive world, hundreds of scoring models. In the mortgage world, it is standardized. So if you ever have an opportunity to pick which score you're looking at, look at the FICO scores 2, 3, 4, 5. And in the mortgage world, like I said, they're going to pick that middle score. Okay. So if your TransUnion's 500, your Equifax is 620, and your Experian is 600, they're going to pick that 600 score. They do not average them. I do understand and acknowledge that there are some credit scoring models out there, or I should say there are some mortgage products out there that will allow you to average your credit score. For a lot of the down payment assistance program and grants that I help connect people with, those options are not available yet. Okay. So we are all about that middle credit score. So in my world, my goal is to get you up above that 600. In that 600 to 640 area, I find you can tap into a fair amount of money to cover might be 90% of the purchase of a house. So most creditors will report to only 2 or 3 of the credit bureaus. So if you have an auto loan, credit cards, things like that, don't be surprised if you pull your credit up, you're not seeing your creditors on all 3 credit bureaus. Okay. Keep in mind, a lot of your creditors have to pay to get those numbers out there to the credit bureaus. As a result, they typically only report to 2 of the 3. If you're using some of the credit building tools, those tools do many times report to all 3 credit bureaus. So when you do pick up a credit building tool, make sure that they report to all 3 credit bureaus. Now, today we are going to try to teach you how to isolate a quick spike or opportunities for a quick spike on that middle and highest credit score if we need it. Okay. So with that being said, what goes into a credit score? All right. The credit score has 5 components to it. The biggest component is your payment history. Okay. So ideally, we don't want to see any late payments in the last 12 months. That can really drop your credit score. If you do have some late payments, it's not crazy to pick up the phone and call them. If it's an isolated incident, ask that creditor, hey, could you please remove that late payment? Many times that first line of defense that you reach, that phone jockey, the first one is going to say, sorry, there's nothing I can do. Politely ask, hey, you know what? I appreciate your time and effort. Can I please speak with a supervisor? It's usually that second line of defense that might be able to expunge or remove that late payment. Now, if it's a chronic late payment, if you've had 2, 3, 4 late payments, maybe not so much success. But if you have, I had somebody just last month that had a 60-day late with Toyota, and they made the phone call. Toyota actually moved the 60-day late to a 30-day late and made the difference for their approval. So it's a game of inches. Sometimes we just need to push those, ask those questions and for people, and you might get some help. Okay. The second biggest thing on your credit report, and this is one that we can control, is credit utilization. So ideally, we want to have your credit cards have a utilization below 30%. So lately, I'm finding if you are able to pay your credit cards down below 30%, you are getting a bigger lift than we have in the past. So it used to be a couple of years ago, if you had a credit card that had a $300 limit and it had a $300 balance, you were not, it was hurting you. Okay. Your utilization was at 100%. And it used to be if you paid that credit card balance down below 30%, you might get a 20-point lift out of that. Now I'm seeing a 30 to 40-point lift out of that. And the only reason I can surmise that that's happening is that the algorithms are becoming very smart. We're watching credit card late payments escalate at a rate that's similar to back in 2004 prior to the meltdown. And as a result, I'm finding they're giving you a bigger lift when you're able to pay down those utilizations because, in my opinion, credit card default rates are rising. So if you're able to pay your credit cards down in an environment where defaults are rising, they're giving you a bigger bounce. So I'm finding a bigger lift right now for people that are able to do that. Now, also, try to leave a little bit of a balance on the cards. Don't pay them down to zero. If I'm finding if you pay your cards down to maybe a $10 balance, you might get an extra point or two on your credit score lift versus if you pay it down to zero. So there's several reasons for that, and I won't go into it, but try to leave a little bit on there, okay? And you'll get maybe a couple of extra points. And when it comes to qualifying for a lot of the programs that I help connect people with, it is a game of inches, okay? Some of these programs, it's 580. If your score is below 580, you're out. If you're 580 or higher, you're in. So 1 point can make a difference. The next thing we want to focus on is the length of credit history, okay? Typically, they want to see at least a good 12-month history for a couple of accounts. So if you don't pay your accounts off if they are installment loans. I've had a couple of people get tripped on that over the past few months, thinking that, hey, if my auto loan only has a couple of payments, I'll just pay it off. Well, when they paid it off, their credit score went down. You would think it would go up, but it didn't. And the reason is they lost a trade line. They had a thin credit profile, meaning they just don't have a lot of credit. So if all you have is an auto loan and you pay it off, now you're showing you've got no active credit. The algorithms hurt them. Okay. The credit scores went down. So don't prematurely, not that I don't want you to pay your loans, continue to make your payments, just don't pay them off prematurely if we're in the process of looking for a loan or to get connected with one of the programs I help people with. Okay. So credit history, another big thing. Now, if you have credit that's been out there a while, don't close the accounts. Just leave them out there. Okay. Closing your accounts can also reduce your credit score. Okay. So if you got, I looked on my credit a couple of months ago. I had an old JC Penney card, forgot all about, haven't used it in years. Don't know how it even hung on for 20 years because I thought it would have been included in my bankruptcy, but I guess it wasn't. It's still showing out there for some reason. And as a result, if I close it, my score might go down a little bit. Okay. So, and every now and then there's accounts that pop up. I don't even didn't know that I had them. So don't close them thinking it's going to do you any favors. Just leave them out there. Now, if it's a recent late payment, you don't know what it is, then obviously that's something you probably want to address. All right. Next things, how to handle some of the big things. Right now, student loans are a big topic. So if your student loans are in deferment, that just means you're probably still in school. Chances are, if you want to apply for one of the programs I help connect people with, you're going to have to take those out of deferment. Okay, we need to get those into some type of repayment status. If your loans are in forbearance, which most people aren't, they're forcing people out of forbearance after COVID now. So you have to come up with a game plan. Some people are taking them out of forbearance and going into deferment. And which is fine, but just keep in mind, the interest clock is ticking. Your balances are still going up. So I always tell people, try to get into some type of repayment plan as soon as possible. Okay. Those student loans are not going away. That's government-backed debt. They will hang out there. It's nothing that you can get rid of in a bankruptcy or anything like that. So you're better served trying to get some type of repayment terms, $10 a month, anything. So something to keep that interest clock from spiraling out of control. Now, if your student loans are in default, not such a bad thing. If you actually contact those student loan companies, consolidate those loans together and get some repayment terms, apply for their 90-day program where after 90 days, they will flip it from being negative on your report to a positive. So think of it this way. You make 3 payments on time, and they're going to take that negative thing showing on your credit, and it's going to show up as paid as agreed after 90 days. You can flip your scores in a big way in 90 days with student loans. Now, as you talk to them, try to get an income-based repayment plan if you're concerned with the payment amounts. Don't settle for zero. Get something. Get $10, $20 a month. Make it affordable, okay? Reason being, if you're going to apply for one of the down payment assistance programs or grants I connect people with, we can use that $10 or $20 payment to get you approved with. So it doesn't affect your debt to income ratios very much going forward when we apply for the financing. And then if you're looking for income-based repayment plans, sometimes those conversations are a little bit tricky. When you call the student loan companies, sometimes they just want to insert you in the zero payment plan. Don't accept that. Like I said, try to get some type of income-based repayment plan that has a payment associated with it. So if you a conversation if you need a conversation or need help with that, please reach out to me. Let me put my booking link this is a link directly to my calendar. I'm going to put this in the chat box. Schedule a call with me. Always happy to go over your situation, put myself in your shoes and tell you exactly what I would do to handle this or any one of the situations you have with regards to building your credit. So next thing, repossessions. Seeing an increase in repossessions lately, and just due to the economy, also seeing a fair amount of people that have been taken advantage of from a lot of B lots where they may have signed for a car, drive it off the lot, it dies, and there's just very little accountability. So very few things are as painful as having to pay for something that's not working, like a car. So that being the case, I get it. So there are a couple of different ways to handle repossessions if they are on your credit. Sometimes we want to get repayment terms with the lending company. And once we have those repayment terms, if you're looking to purchase a house, we can actually get you approved. And what you do with the repayment terms after we're in your house, that's up to you. No judgment there. Sometimes if it's possible to pay the balance off, that might be the easiest way to do it. Lately, I'm seeing some people on some FHA backed products that were able to get approved with repossession debt still sitting on their credit. So provided it's over a couple of years old. So just because you have a repossession doesn't mean that you can't get it financed. So I just need to know what your situation is so I can best coach you. So if you have one of those situations, please schedule a call with me. Always happy to put myself in your shoes and tell you exactly what I would do. Now, with regards to bankruptcy, there are two types of bankruptcies: Chapter 7, Chapter 13. Chapter 7 is when you wipe the slate clean. And if you ever have the option to do the two of them, I always tell people, treat your personal life like a business, okay? If a business had the ability to wipe all of their debt clean and start over, they would do it, okay? So Chapter 13 is when you reorganize. And that reorganization is they take all your debts, put them together, negotiate the balances down, and then you repay a trustee that's appointed by the bankruptcy courts over it could be a 4, 5, 6 year period. It is a tough road and a long road. The payments for a Chapter 13 repayment usually are pretty substantial. So, anyways, I always tell people, if you have the ability to do a Chapter 7, try to go down that path. If you do a Chapter 7, we cannot finance you typically till 2 years after your bankruptcy is discharged. Okay. 2 years may sound like a long time. I'm telling you, it flies by. And after you get that pass on that Chapter 7, it is very easy to rebuild credit. Not difficult to get your credit scores from, could be mid 300s after a bankruptcy, well into the 700s after 18 months, if you let me help you, coach you on that side and take advantage of some of the tools I'm going to introduce to you in just a few moments. So it is important that you rebuild credit right after that discharge date, and extremely important that you don't overindulge on the credit, because we do not, any late payments after a Chapter 7 and your scores get crushed. The algorithms that generate your credit scores are getting smarter and smarter. Artificial intelligence is everywhere. And if you have a late payment after a bankruptcy, your credit scores can go up very quickly, and they recognize that. They will hit you really hard and take it down very quickly too. So it's important that you don't have any late payments after that bankruptcy. Chapter 13, for that, you only need to make 12 months payments on time to the trustee, and then we can actually get you financing and get you into some of these down payment assistance and grant programs. So with trustee approval, okay, I've never been totally denied. I've had trustees push back a little bit, but we've always gotten them through. So I do run across a couple of those a year where people are in the midst of a Chapter 13 and we're able to get them across the finish line. Once you're done paying the trustee, for whatever reason, we do have to revert back to the 2-year discharge rule. So there is conversation and chatter that they are changing that, because it really doesn't make a lot of sense, but that's what the rules are. So now, with regard to collections, focus here, because and I'm going to mention this a couple of times. This is really what trips a lot of people up, and myself included. So way back when, and this is actually before we had credit scores, thank goodness, but it used to be where we were told, go out and take care of those old collection accounts. And if it was, the smaller ones, just pay them off and your scores will rise. That is not the case. Okay. I'm going to tell you, if you have collection accounts on your credit that are over 2 years old, leave them alone. Okay. Do not pay them. Do not call them. Just don't touch them. Okay. Reason being, think of it this way. If you have a collection account that's over 2 years old and you pay it today, it's going to show up next month on your credit as paid as agreed. Okay. So if you've got a old medical collection for $35 from 5 years ago that you pay this month, next month it's going to show up that you paid it. It's going to reduce your credit score. So don't do it. If we happened to do one of the mortgage programs, every now and then, I mean, first of all, medical collections are getting a pass right now. So just leave those alone. If they're under $500, nobody's asking anybody to do anything with them. But let's just say you have an old collection, old cable bill or something like that, and you pay it off, it drops your credit scores. It's just not worth it. So what we do is if we get you approved for these mortgages or for these down payment assistance programs or grants, if the underwriter who approves your loan comes out and says, hey, I want this collection paid, we'll go out and pay it then. By then, we'll have your credit score locked in. And if they make us pay it, if it reduces your credit score, it doesn't matter to us. Okay? We've already got you approved for the financing. So we want to work on the things that are going to get your credit scores up today. Once we get you up to that approval credit score criteria, that score is going to get locked in with your lender for 90 days. We've got 90 days to get you across the finish line. If within those 90 days, part of the approval process is to pay a couple of collections off, we'll do it knowing it's going to reduce your credit scores, 90 or 120 days down the road. We don't care. We've got you in the house. You got the mortgage. You got the money. It doesn't matter. Okay. So many times they don't ask lately those old collections that are a few years old, but just the same. Now, so we just discussed anything over 2 years old, leave. Medical collections, don't worry about those. Anything that's 1 to 2 years old from a collection, we may want to run those through a simulator. There are a lot of lenders out there that have simulators that we can connect you with where they can run your credit through and they can tell us what needs to be done to get a quick spike in your score. Okay. Many times I won't even connect you with the lenders because we can figure that out on our own. It's not rocket science when you do enough of them. But if you're right on the borderline, it may be worthwhile doing it. Now, if your collection accounts are, less than a year old, then we want to know what they are and we want to address those on a case-by-case basis. Schedule a call with me. Happy to discuss those with you and give you my input with regards to which way to go. All right, next thing. My steps. These are my steps as far as what goes into credit repair. First thing we want to do is we want to get a copy of your credit reports. We want to go out to freeannualcreditreport.com, get all 3 credit reports. Okay. If you have the ability to pay for it, pay for the FICO scores. Okay. FICO scores are what we're looking for. We want to see what your middle score and your high score is. That's what we want to work on to get those lifted. We also want to understand what baggage is out there, what's dragging you down. Okay. Is it collections? Is it late payments? So we want to understand your profile. We want to understand all the open trade lines and figure out what is going to be the best thing to manipulate to get a quick spike in your score. Keep in mind, we need to have 2 to 3 trade lines to get you approved for some of the down payment assistance programs and grants. Every now and then, if you want, happy to connect you with a lender. We can run your profile through a credit auditor and it'll tell us exactly what you need to do. Now, if you don't have a lot of things, positive things on your credit, we can add new credit too, by the way of secured cards, secured loans, authorized users, things like that. And if your credit scores are below 500, we may want to consider sending dispute letters out. Okay. All right. So the do's that we want to do. Obviously, we want to get a copy of your credit reports. If you need me to do it, I can connect you with different lenders to figure out what we need to do from a credit auditing standpoint. If you have the ability to pay down credit cards below 30%, great. Keep in mind, do not pay them off. Okay. If you need to build credit, okay, sometimes go out and ask your friends, family, hey, would you, I'm approved for a loan or I can be approved for a loan. I just need a little help. I need one more trade line. Could you add me to your credit card? Don't need the credit card. Just need the credit juice that you've built. So that's how I would ask a friend or family member. Okay. Don't need any money. just need a little bit of help building credit. And if you can add me to one of your cards, it would really help out a lot. Who wouldn't want to help out a friend or family member with that? Okay. Now, if you need to build alternative trade lines, if you don't have those options, we can actually take credit that you pay on a monthly basis and get it added to your credit report if those types of credit don't report. So, for example, cell phone bills, car insurance, rent, different subscriptions that you have coming out of your bank accounts on a monthly basis. If we have those things for 12 months, all we have to do is get proof. Bank statements, credit card statements, debit card statements, things like that. We can get those statements provided to a third-party credit aggregator to get those added to your credit report to build a credit profile to get you approved for some of the programs. So, and anytime we have collection accounts over $2,000, we probably want to think about setting up some type of payment arrangements on those. Please reach out to me, and so I can coach you on that. Sometimes that may not be worthwhile, so I always like to help guide people on that. Now, the things that we don't want to do, okay? We don't want to apply for new credit unless we're pretty confident we're going to get it. And right now, I can't say with a high degree of certainty that I would trust anything on that side. So sometimes people go out to Credit Karma, Credit Sesame, and they'll say, hey, you've got an 80% chance to get approved for these 2 credit cards. Just don't do it. You're going to get these inquiries into your credit, pull your scores down a little bit, and you may not get it. The credit cards that I want to connect you with, you are pretty much guaranteed to get. They're secured cards, okay? 5 points may not sound like a lot for a credit inquiry, but it is, okay? So we want to work with secured credit cards that are going to do more of a, they're not going to do an inquiry unless they're going to issue a credit card, okay? So we want the juice to be worth the squeeze. So we want to make sure that that hit that you're going to get on your credit is going to help you because you're going to get the card. You don't need to be denied. That's just an unnecessary hit on your credit. Now, like we talked about before, don't blindly pay off your collection accounts. Okay. 2 years or older, leave it alone. 2 years or less, case by case. Don't touch the medical stuff. 1 to 2 years, we're going to run through a simulator, and anything less than 1 year, we need to address on a case-by-case basis. Schedule a call. We'll go over that with you. Now, don't pay off your credit card balances to zero. Just pay them down below 30%. If you want to get the biggest bang, pay them down to $10. And like we said, don't pay off any loans prematurely, and don't become an authorized user on any accounts that are new, maxed out, or have late payments, okay? So be careful who you ask to be an authorized user on their accounts. And most importantly, do not engage the services of any debt consolidation services. These companies are out there to make money, okay? They are not your friends, okay? They may seem like it's a good alternative, but I'm telling you, it's not. They will wreck your credit, and by the time you're done, it's just a long haul. If you are in that bad a shape, you are better off going into a bankruptcy, even a Chapter 13 bankruptcy. And the reason I say that is once you connect with a debt consolidation company, they show up on your credit. All your creditors are going to go, they're going to contact your creditors. And they're going to go, oh, hey, we represent John Collins. He's now in debt consolidation. Please contact us directly. Well, the creditors are going to go, oh, next time they report to the credit bureaus, they're going to go, John's in debt consolidation. It's the same as being in bankruptcy in the lender's eyes without the protection of a bankruptcy court, okay? So think of it this way. These debt consolidation companies basically convince you that send your payments to us and we'll negotiate the balances down, okay? But what they do is they collect all your payments for the first 6 months. Do you know where those payment money goes? It goes to pay the debt consolidation company. They don't send anything to your creditors. And just about when your creditors are so fed up with it that they're going to just throw you into collection, That's when they start dripping the money out to those creditors. Okay. If you were at that state, like I said earlier, you're better off just going into bankruptcy. Okay. So, next thing, credit building tools. All right. First thing, secured credit cards. I like them. I like them a lot. Okay. You basically what it is you give a company $300, $500, and they're going to give you a credit card with a $300 to $500 limit. You almost always are going to get approved for these. The only time I've found that people don't get approved for them is if they try to get a secured card with a company that they hung out to dry before. So if you had a previous credit card with Capital One and didn't pay it, don't go to Capital One to get a secured card. Okay. I bank at Michigan First Credit Union. Don't go to Michigan First Credit Union if you left them with an overdrafted account. Okay. Go somewhere else. There are plenty of companies out there. Make sure they report to all 3 credit bureaus. Typically, once you open up a secured card with them, it takes about 30 to 60 days for it to show up on your credit. Once you get the credit card, use it right away. It forces them to start furnishing that data to the credit bureaus. Okay. Try not to keep that balance. Try to keep above 30%. Make sure we keep the balance below 30% is what I should say. So try not to charge it up. If you have to use it and charge it above 30%, know the date of when they report the data to the credit bureaus. Find out what that furnishing date is and make sure you have the card below that balance on that date or before that date. Okay. If you can, pay the balances off as quickly as you possibly can. Okay. That's a secured card. Secured loan, one of my favorite tools. Again, I shared with you earlier, I bank at Michigan First Credit Union. They have a great tool called a secured loan. What they do, and a lot of credit unions have these, and you can find them online. Just make sure that they report to all 3 credit bureaus. And what it is you give them a fixed amount, say $500. In the case of Michigan First Credit Union, they charge $525. So you give them $525. They charge $25 to do this. They take, so that $25 is gone. They take the $500 leftover amount, put it in a savings account and lock it down so you can't touch it. But they give you a loan for $500. So it looks like you got $500 checking, $500 your savings, but you just can't touch the savings. Then you need to pay that $500 loan off over 6 months. So they take $80-something a month out of your checking account and pay that loan off. Once it's paid off, they release the money in your savings account. The great thing about this is that they report to all 3 credit bureaus that this is a personal line of credit. It may show up as it's a secured, but you get a benefit of a personal line of credit, which is one of the hardest things to get, harder than a credit card. So as a result, I find people get a good 40 to 60 point bounce lately out of just doing this tool. Okay. So at the end of 6 months, though, I find that the scores do go down because once it's paid off, you lose that trade line. So you might need to redo it after 6 months. Great tool, great way to get a quick lift in your scores. Oh, by the way, on secured credit cards, you can get a good 20 to 40 point lift nowadays out of that. Authorized users, again, works about 90% of the time. Okay. Make sure you're going on a seasoned account with a low balance, low utilization, and good payment history. Okay. Alternative trade lines. Here are some alternative trade lines that can be added to create a credit profile for you. Rent, auto insurance, PO box payments, storage unit payments, cable bills, cell phone bills, renter's insurance, utility bills, monthly subscriptions, Netflix, gaming memberships, gym memberships. This would have been a year ago. I had a young man, had 0 credit. We were able to, but he was a gamer. He was living in his future mother-in-law's basement, actually. And he had several different gaming accounts, Xbox, PlayStation, and then, I don't know, like World of Warcraft, some other gaming stuff that he pays on a monthly basis just came right out of his debit card. We were able to take 12 months bank statements, furnish those to a third-party credit aggregator, and they were able to put 3 of those gaming accounts, $9.95 a month to $20 a month, whatever it was. We were able to put those on his credit report. And then he had the credit history to get approved for a down payment assistance program with no credit scores. Okay. So there are workarounds for these things. I just need to know what your situation is so I can best coach you. So let me give you that link again to my calendar right here, www.nodownpaymentrequired.org/book. This is a direct link to my calendar. Just schedule a call with me. Okay. All right. Credit monitoring services. I always recommend this. I'm all about free. If I had the choice, I would go to Credit Karma. Credit Karma will give you access to Equifax and TransUnion. You can set up alerts where anytime any activity happens on your account, new stuff, paid it down, credit scores go up, anytime you get a change in your credit profile, you'll get an alert. Great way to monitor things and manage your credit going forward, and it's free. Okay. As you sign up for these accounts, they're going to try to upsell you. Okay. Hey, want our premium here, premium there. Just keep hitting the no thanks button and eventually you'll get to the free account. Okay. Same with Experian. So I find if you go to Credit Karma, you're going to get Equifax, TransUnion. If you go to Experian, you're going to get Experian. Now you've got all three accounts monitored. Go to freeannualcreditreport.com to get your free credit report, of course. But the monitoring is also another good free tool to have. Okay. If for any reason you can't get into Credit Karma, Credit Sesame is a competitor of theirs, does a good job too. And the Credit Hero, it's a good tool to go into. I think you spend $10 a month and they'll give you access to your credit scores and things. So Credit Hero score is not a bad way to go to. But I like Credit Karma and Experian, and that tends to cover 90% of people. Okay. So next thing, credit restoration services. I touched on these briefly, but there's some big boys. Lexington Law, actually National Credit Care just got renamed. There's some upheaval going up. You don't hear about these companies nearly as much because they're not nearly as effective as they used to be. What these companies do is they take advantage of a loophole in the Fair Credit Reporting Act. And that loophole is if you challenge something on your credit, the credit reporting agencies have 30 days to investigate and get back to you. And the loophole is these companies would send letters to the credit bureaus on your behalf, challenging things. And it used to be where 33% of the time, the credit bureaus couldn't meet that timeline of 30 days to investigate it and get back to you. So they'd have to remove the debts. Everything is so automated now. I find that these are not nearly as effective as they used to be. And they are also fighting the credit industry or credit bureaus. Equifax, Experian, TransUnion are fighting these companies a lot harder. They are sending letters out to stall. So if you use some of these companies, chances are will get a letter saying, oh, this looks like a form letter we've received many times. And as a result, we're not really sure that this is you sending it. So we are not going to be honoring this request because we think it might not be you or might be frivolous. So these credit reporting agencies are getting smarter and smarter, and they're not responding to these things nearly as well. So no sense paying the fees for this slower outcome when you can, with today's technology, you can manage it yourself. Heck, you can go out to Credit Karma and challenge your credit. If something's not out there. Now, don't challenge everything that's negative. If you're going to go out there and challenge things, try not to challenge more than 5 things at a time. Okay. more than 5, and the credit bureaus look at that as frivolous, and they don't have to respond to anything, and that wastes time. We don't want to do it. Chances are just don't like a hit 2, 3, 5, 4, 5 at the max, and then let it go. Wait till you get the response on those in 30 days, and then go back and hit them again. So, and you're just going to hit the ones that didn't respond or didn't come out in your favor. Okay. So, that's it for the credit building tools. Where do we go from here? I always tell people, schedule a call with me. Okay. Getting your credit up is not rocket science. I just need to know what's out there. So I always tell people, go out to Credit Karma, get in tune with what's on your credit report. And I get it. If it's not favorable, you don't want to look at it. I know that. I've been there. But in order for us to start tackling things, you need to do it. Okay. So pull that up, get in tune with it, have it in front of you, schedule a call with me, because I'm going to ask you, hey, where's your credit score on my call? What do you think is dragging it down? And these platforms will tell you what's affecting your credit score the hardest. Is it collections? Is it it'll tell us. And then I can better tell you how to deal with it. Okay. And how to deal with it quickly and most effectively. All right. Not rocket science by any means, but things are a little bit different in the mortgage world as far as how your credit relates to it. So, and I'm all about just giving you the tools to get a quick spike in your score so we can help you and your family get into a housing opportunity as soon as possible to get out of the renting rut right now. Because right now, that's the most disheartening thing is what's going on in this country with regards to rentals. If you are a good landlord, thank you. But I find that 90% of the landlords are not good. They're great at cashing checks. Okay. They're not about building opportunity and helping people in the long run. So anyways, I will leave it at that. So please schedule a call with me. Always happy to learn your situation. And if you have also, let me put my contact information in there one more time. If you have any friends, family members, anyone that's stuck in that renting rut and needs help or guidance, I hope you pass them along to my webinars. Let me give you a link to my webinar. Let's see here. Looks like I don't have that on my list. So let me take you out. Here it is. No down payment required.org. If you go out there, no down payment required.org. I'm going to put that in the chat box. These are the webinars that I do 100% for free, teaching people how to tap into the different down payment assistance and home buying grant programs that are out there. And there are programs across the country. Actually, we just finished up building an app for it that you can go out there. And actually, if you go to the Google Play or Apple Store and just type in no down payment, you'll see our app. And here it is, just to kind of give you a feel for it. And it's the no down payment app. And what this application does, here we go, hit enter here, is it's going to give you access to all of the down payment assistance programs and grants across the country. Oh, that's comforting. Continue to cite. No down payment is not secure. I guess we have to look into that. Here it is. So I can tell you it is a secure app, and I do not sell your data. Okay. 100% here to just try and help the masses. So to give you a feel for how it works, here's the house that I grew up in, 16801 Lamphere in Detroit, 48219. You can see it qualifies for 19 programs. Okay. Just enter my contact information. I'll give you a feel for what it looks like. Okay. Enter your information, and it's going to give you a list like this is going to get emailed to you showing you all the different programs. So this house that I grew up on Lamphere qualifies for 19 different programs right now. One of them up to $25,000. So chances are there's a new program that's going to be servicing on Monday that could offer up to $75,000. So if you follow me on Facebook, you'll see we're about to start running some ads for that. And that's the Tobias program. So great program. It's a shared equity mortgage program that we're going to start advertising. It will offer up to $75,000 or 40% down payment, whichever is lower. So if you're buying a house for $100,000, it'll give you $40,000 towards your down payment. It's a lot of money. If you're buying a $200,000 house, it's going to give you $75,000. Okay, so $75,000 or 40%, whichever is lower. So great program launching this week. I'm actually going to an event today on the east side where they're launching it. New lender, Guild Mortgage, is actually running that one. So very excited about connecting and working with them today. So anyways, lots of opportunities out there. I hope you can read through the screen that I love what I do. I love connecting people with this program, love helping people get into home ownership. So anything I can do to further that cause for people, love doing it. So please reach out to me. I always like to be as accessible as possible. Here, 248-252-7283. This is my cell phone number. Just put that in the chat box, and I'm going to hit that here. 248-252-7283. Perfect. Now, I am a glorified phone jockey. I'm on the phone all day, just about every day, trying to help as many people as I possibly can. So if I don't answer your call, please shoot me a text. I have a lot of scheduled calls on my calendar, and without fail, life gets in the way of a lot of people's agendas. So I do get breaks where people can't make those calls. So I try to return calls for people that text me in between. So never hesitate to call or text me if I'm available. I always like to answer. I pride myself in returning all of my phone calls before the end of the day. So anyways, that being said, hope our paths cross again real soon. If you have any questions that I couldn't get to today, I apologize. I'm headed to 11 o'clock meeting and need to head out right now. So never hesitate to hit me up with a text or chat, or just call me up. So love chatting on the phone. So anyways, hope you enjoy your weekend. Looks like a beautiful Saturday out there. And I try to do these credit building webinars a couple of times a month. You may stumble across this on Facebook Live or YouTube. I appreciate that. So hope our paths cross again soon, and have a wonderful weekend. Take care, everyone.